Welcome to Daily Fortune, where we talk about the latest topic about finance and investment. But before that, please don't forget to click the like button, subscribe, and hit the notification bell so that you'll know when I upload new videos. Now, let's get started. This YouTuber star has been teaching people how to invest and become financially secure. You may have seen him on TikTok and here on YouTube. Before introducing the star and his tips on how to invest, make sure you hit that subscribe button and click that notification bell to be notified of our latest videos. Did you ever try or have ever thought about that $100 in your pocket that you could turn into $1,000 or $1 million? Some people will just spend it anyway. Others might save it, but people who have the millionaire mindset would definitely make something out of it. Sadly, this is not being taught in school. The lack of knowledge we have in terms of investing is scary, especially when we see beginners jump off on a known cliff. In this video, we will share the Beginner's Guide to Investing by Mark Tilbury. In one of his videos, he tried the Invest $100 challenge, and now let's see how we explained it. We'll make it easier for you to understand what he's talking about. Tilbury shared that he became the millionaire he is today through the investments he did in the past. Can you guess how much he invested before? It was less than $100. Can you believe that? The path to being rich is not the easiest. It takes a lot of courage and taking more risks that you'll be able to benefit from. Tilbury recommended these 8 ways to start investing with only $100. He also showed that the risk for every way will increase. Keep in mind that when the risk goes up, so does the potential reward. He put his $100 and revealed how he invested his money to those options. First things first, when someone asks Tilbury how they should invest $100, he usually says to invest it in yourself. I think that's the best advice he gave, because how could you start doing something new to yourself if you don't have knowledge about it? It's okay to be prepared in all aspects than regretting how much you'll lose. So, buy and read those books about investing, how to become financially stable, learn how to be a mindful risk taker, and improve your skills. That simply shows how you can invest in yourself before you dive into a whole new uncertain and risky world. After investing in yourself, you can already try this set of options or ways you can invest and grow your money. It worked for Tilbury. Maybe it could also work for you. So, let's go. Number 1. High interest savings account. The top one on the list, or the first investment, is the high interest savings account. He rates it 1 out of 10 on the risk scale, meaning it has the lowest possible risk anyone can take. It's difficult to find a savings account that pays a significant amount of interest these days. But the major reason is that by depositing money into a savings account, you're beginning to build an emergency fund, which everyone should have. This is money that you can use if anything unexpected happens, and it carries very minimal risk. Having this emergency fund will result in avoiding debtors that will push us to pay the money back. It's better to have a backup when there is an unexpected event that might happen. We're not sure what it could be, but it's okay since we've prepared for it. An emergency fund could save everyone from the possibility of taking loans or paying higher rates. When you keep your money in the bank, it gradually depreciates in value, so Tilbury shared how to choose the best savings account. There are 2 things that we should take into consideration. Here are the saving account requirements. First is to look at who offers a good interest rate, which mostly depends on the economy. Then the second one is having access to money 24/7. Ali Bank, Marcus by Goldman Sachs, and Citibank are banks worth considering since they offer good interest rates. Marcus by Goldman Sachs, and their interest rate is 0.7%, which is not that high but is currently one of the best available. Number 2. Gold. The second option is investing in gold. This was rated 2 out of 10 on the risk scale. Why? It's all about the opportunity cost. You must decide whether you want to simply safeguard your $100 from inflation or whether you want to invest it in other opportunities that will allow it to grow much faster. If you invest in gold, you will miss out on these potential returns, which makes it a dangerous investment. If you already have a lot of money and all you want to do is secure it, this is the best investment for you. Let me tell you a short background. So, in 1913, the Federal Reserve was created. The US dollar had lost 95% of its value. The remaining 5% was only left to us. Imagine that big loss on the value of that currency. So, Tilbury recommended also to start investing in gold if you don't want to stop losing the value of your money. Probably if you had a $100 nugget of gold in the year 2000, it will now be worth around $580. Gold doesn't change in size, density, and appearance, but what changed is the value of dollars on how much people can purchase it. Our ancestors utilized gold as their primary form of payment. It's ideal since it can't be replicated and lasts for thousands of years. So if you've ever watched the TV show Gold Rush, you know how difficult it is to get gold out of the ground. In order to invest in gold, you have two options. The first approach would be to number 1, buy real gold. Yes, it should be real, but if you've bought jewelry, gold bars, coins, and other such items, you're probably overpaying because the seller would want to make a profit out of it. And that means you will be paying more than the original and true value of the gold itself. The second option is to invest in gold by purchasing a gold ETF or ETC through a broker app, such as Robinhood in the United States or Trading 212 in the United Kingdom. Then you'll be able to buy gold at its true worth and sell it much more quickly. In the United States, there is gold ETF on Robinhood, which is one of the world's largest gold ETFs. They have around 36.49 million ounces of gold in vaults all across the world as of June 2020. And when Tilbury is in the UK, he invested using the Trading 212 with just a single click. Voila! If you also wanted to be Miss or Mr. Goldman, go and try to invest in it. Number 3. Index funds. If you're not interested in the first two options I've discussed, maybe this third option is for you. Try a simple, low-cost index fund. This was rated 3 out of 10 on the risk scale. For example, if you put $100 per month into an index fund with a 7% annual return, you'd end up with $123,000 after 30 years. This is the power of compound interest. All of this may be done without any prior understanding of the stock market. Warren Buffett, one of the world's wealthiest men, bet $1 million that a simple S&P 500 index fund would outperform a professionally selected hedge fund portfolio over a 10-year period. This competition was completed in 2017, and the results were made public. Warren Buffett had actually won $1 million bet, demonstrating the power of index fund and the fact that even the most inexperienced investor can compete with the pros. This is how index fund works. As a person who wants to invest, you can buy your own preferred company out of the world's most well-known firms, such as Apple, Microsoft, Amazon, and Facebook, and your money will be split evenly among them. But if you leave them unprotected, the government will begin taxing your gains. Do you know you can still protect your index fund, and it differs in every country? For example, Roth IRA in America. A Roth IRA is an individual retirement account to which you can contribute after-tax dollars, while ISA, or the individual savings account in UK, is an account that you can use for your investments. If you have money that you think you'll be able to put aside for several years without touching, ISA will almost always outperform cash savings. This is the best chance to take advantage of ASAP and max out your allowance. For the challenge, Tilbury put $100 into S&P 500 index fund, which was averaged a 7% annual return over the last 20 years. $100 may be insufficient, considering the S&P 500 is valued at almost $3,000 per share. But you don't have to invest more in that. Tilbury said that his favorite brokers are Fidelity, Charles Schwab, and Vanguard. Under Vanguard, you can see in their websites the list of companies in the index fund, so you can choose and purchase the right one. Number 4. RET. The fourth way to invest is by RET, or the Real Estate Investment Trust. This is 3 out of 10 on the risk scale. The simplest explanation of Tilbury goes like this. Consider a scenario in which your friend collects $100 from 3,000 people. He'll get $300,000. Then, he invests this money in real estate. He rents it out and distributes the proceeds to the 3,000 people who assisted him in purchasing the house, allowing them to begin earning. It allows everyone to profit from income-producing properties without having to acquire one. Consider it similar to purchasing a small share of real estate. Offices, commercial complexes, Residences, hotels, and other properties are owned by equity REITs. They rely on rent as a source of income. They are required by law to distribute 90% of all profits as a dividend to the investor, but they all tax differently. The good news is that as of January 1, 2019, REIT ETFs had a 10-year average return of 10%, which was higher than the S&P 500. If you live in the United States, you may earn a 12% annual return by investing in Vanguard's VGSLX, which outperforms the average real estate investor. Isn't it amazing? Tilbury then, for the challenge, invested $100 in a similar REIT through the Trading 212 website. It provides a high level of global diversity, which means he can invest in all of the world's emerging property markets. Number 5. Business. Buying and selling items. The next option is the buying and selling of items. It is 4 out of 10 on the risk scale, as Tilbury shared. But it also depends on how good you are at finding some good deals to buy and sell. Here's the good part. You can buy and sell something you are interested in, or just anything you want that you are knowledgeable about, which potentially results in higher returns. Again, for the challenge, Tilbury bought a model engine and model plane he found on the Facebook Marketplace for approximately $100. Then he advertised it on specialized websites for model flying. Then he'll sell it to the right people who could offer a good deal, and he could possibly earn big profit from it. Let's move on to number 6, individual stocks. This is 6.5 out of 10 on the risk scale according to Tilbury. Individual stock investment has some risk, but it may be rewarding if you pick your firms well, as there is the opportunity to make a lot of money. Tilbury was really fortunate to pick a few good stocks during the dot-com boom in 1995, which he cashed in and made a lot of money in a very short period of time. When the bubble burst, several of the companies he'd held on to for a long time and had only cost him a small amount of money went out of business. 2 things are a very important part of stock investing. These are luck and timing. Tilbury tried the experiment where 100 monkeys threw darts at the financial page in a newspaper. And you know what the results are? On average, the stocks chosen by the monkeys outperformed the smartest hedge fund managers on Wall Street. Out of the circle of choices in the dartboard, he got Samsung, and then he set an order for Samsung. And now, rather than talking about investing, we'll now move into the world of gambling and speculation. Are you ready for it? Number 7, cryptocurrency. We are now on the 7th option, all about cryptocurrency. And I know you are all familiar with it because it has shaken up the world of finance and investments. This was rated 9 out of 10 on the risk scale. Cryptos are divided into 3 categories. These are Ethereum, Ripple, and of course Bitcoin. Maybe you already know Bitcoin, the most popular type of crypto. If you had purchased $100 worth of Bitcoin in 2015, it would be worth roughly $5,000 now. That's a whopping 5,000% return on your investment, which is quite unbelievable. As a result, many people who invested in Bitcoin early in 2017 became millionaires overnight. But of course, if someone has gained from it, there will be people who lost money from it as well. If you had put $100 into Bitcoin in December 2017, when it was at its peak, you would have had less than $17 left in December 2018. So, in reality, not everyone is certain of what it'll do next. It's highly risky, but it's also very appealing since it has the potential to make you millions of dollars. Tilbury invested $100 again on Bitcoin for the challenge. Number 8, Lotto. And now for the last option, here's what we call Lotto. Maybe you didn't expect that, or some of you might have an idea that it can make you rich, but with the lowest probability. This is 10 out of 10 on the risk scale. Did you know that 57% of Americans buy at least one Lotto ticket every year? That's a lot. And the chances of really winning are 1 in 14 million. If you believe you're lucky, then go for it. Every year, millions of players lose money, yet they continue to play since the stakes are so great if you win. But remember, you only have a small to no chance of winning. Tilbury, for this challenge, bought a $100 Lotto ticket. Upon scratching the tickets and tallying their wins, he earned back $50 from the $100 investment. Yeah, people might feel excited about it, or the satisfaction of winning will disregard the part that they've spent more than what they actually have earned. It's fun, but people are risking too much money for nothing. So that's it. Those are the 8 options or ways you can do to earn more and be wealthy. And now it's all up to you on what you'll be choosing in the end. Think carefully and invest smartly. Thanks for watching and see you in the next video. So that's it for today. I hope you learned something from today's video, and to get updated with the next videos, please don't forget to hit the notification bell. See you next time!